Welcome back, and this is our much-watched and much-awaited segment, Charts 2017, where we are asking our chart gurus what have they made of 2017 as of now. And now comes our most popular chartist, Ashwani Gujral, joining us on this very special segment. Ashwani, good morning yet again to you. Well, first up, let's start with the mother of all charts, Nifty. What does it look like under the current circumstances? What's the run for the Nifty in 2017?
See, markets don't move in isolation. There is a certain global environment that is needed for markets to move up. Last couple of years, as we've heard before, commodity prices were low, dollar was lower, and being a commodity consumer, we had a very, comfortable ride. Now, last year, if you see, Bovespa went up 90%, Russia went up 60%, but we went up only 3%. So the problem this year is going to be we have headwinds against us globally, and as you can see, FIIs have not shown any interest despite our great fundamentals, etc. So chances are that if last year the range was 7,000 to 9,000, this year that range could get compressed to about 7,500 to 8,500. So broadly, the market could contract most of the year. In a good environment, you'll get 85, 8,600. In a bad environment, you'll get 7,500. So we may not move a whole lot, and you could have your handful of stocks doing well, because a lot of our companies are commodity takers. Plus, we all keep getting these inflation concerns all the time. It's not going to be really easy for us to move up, particularly in the face of consistent FII selling. We may hold on to levels because domestics are buying, but we may not make great progress as we've seen in the last couple of months.
Okay, Ashwani, before we discuss the other two major indices, since we are talking about the global setup, wanted your thoughts on the dollar index, crude oil, and also US markets.
See, dollar index continues to show strength, and above 103, levels up to even 107, 108 look possible. And similarly for crude, it has made a fairly decent bottom. It has been basing in this 30 to 50 zone. Now it's broken out of 50, and levels of 75 are possible on crude oil. Similarly, as S&P 500, I think once it broke out of 1600, a level of 2500 was possible here. I think Trump will have a Modi style 1 year honeymoon period. And that time, US markets will probably rally on their own. So another 10% is possible on the S&P 500, but we don't need to be elated about that, because chances are we will not participate greatly in that rally. And you will have a similar scenario where large cap indices do nothing, but your mid caps tend to fly around.
Oh yes, we have learned that by now, that we have decoupled from that bit of a rally that we've seen across the globe. But Ashwani, I'm most interested to know what are the charts for the year in terms of sectors in our own markets. And the sectors of the year, according to you, are metals and commodity producers. But those were the sectors of last year. So if someone's missed the bus, can they still hop on?
See, they are coming out of massive bear markets. So, the recovery in price has hardly been anything. I mean, what is crude recovered from like 25 to 30? What if it goes to, 80, 85? Plus, also metals. If there is a big infra push coming from the US, metal prices will move up, and they are moving up in that anticipation. So all of our metal companies, oil and gas stocks, even PSUs, because chances are PSU companies are pricing in some sort of government push on infrastructure, etc. So just from the charting angle, these three sectors look very good. Along with Reliance, once we get past this 1100, 1120 zone, that could have a tangent of its own, because last time we saw in 2005, 2007, when oil went higher, Reliance had a great bull market. So chances are that if Reliance can pull this market higher, because IT and banks are kind of dropping out. So we need, a strong push from commodities, PSUs, metals, and, these new sectors. PSU has been a hated word for a long time. And one of the reasons this moved up when Modi came was because he was planning big things on, the PSU space. So chances are that new stocks will tend to enter our mind space.
Gold, Ashwini.
See, gold is very near its strong bottom, about 1050, 1150, those levels. Chances are even that is making some sort of a bottom. And why it is making a bottom? Because if there are geopolitical things that start to happen with North Korea, etc., that fear could easily take gold up to 1400. So these are good levels where almost zero fear is priced into the gold market, and possibly even the dollar is playing its role. But if I was interested in this market, this is the time to buy gold, possibly $100 downside and $300 upside.
Finally, Ashwini, of course, our viewers would want to know what are the big stocks that you're playing for this year, 2017.
See, let's talk about the underperforming sectors also. So all kinds of commodity consumers, whether it's tires, paints, anything that consumes global commodities, will now have their rallies under pressure. Some of them, if prices rise too much, could even go into bear markets. So something like sugar will do well, but CAT may not do as well. Consumption will take a hit because it's been in a bull market for a long time, and now it's getting this reason to correct. So if it does have a bad year, at lower levels, you should try to buy into consumption stocks. Financials could have possibly a down year, down to sideways, where the bank Nifty could be between, say, 16,000 to about 19,000. So in a bad environment, 16,000. In a decent environment, probably 19,000. Even autos, once metals start to go up, at some point, margins, etc., may get hit. So, things which have done well over the last couple of years are likely to have, a bit of a correction or probably downside this year. As far as stocks
Yes, please go
are
ahead.
concerned, MGL is the best gas stock. Now, it's not very well followed, etc., but the entire gas space, if you see IGL, Petronet, MGL, that is likely to do a lot better because everything is starting to run on gas, power plants, CNG, etc., etc. So Hindalco is another one. Again, copper is doing extremely well. So chances are this could get up to levels of 250. EIL, which has been an outperformer this year, possibly, if government spends more, EIL benefits. So this is one stock which would go up to even 230. And NBCC, recently the chart action has been extremely positive. Maybe, it's a budget type stock. So this year you could do 320. So I expect, PSUs to perform extremely well this year, along with commodity producers as well as, oil and gas.
Okay, that's a bunch of optimistic ideas as well to work with, and all those red flags coming on those who are consumers of commodities. All that from Ashwani Gujral. It was a pleasure listening to you about the year that will be. Thank you very much, Ashwani Gujral, for joining us.